Let's talk now to International Affairs Specialist Jake Stratton. Jake, thank you very much for joining us. Emerging markets, of course, present risks and opportunities. You look at how to weigh these up, and you've done that in this yearly report that's just been released. How do you do that? What's the basis of how you work this out?
Well, we look across the world and we rate each country according to different factors, whether it's political risk, security risk, operational risk, or even travel risk. And for each country, we're obviously looking ahead and helping companies to assess what is going to affect their business in their particular sectors over a 12-month, 18-month, 24-month period. So it's a wide range of factors. Now,
you mention in this report that 2011 will be marked as a year of increasing national self-interest. Explain that to me.
Yeah, well, I think the days of pure ideology are over now, and a lot of countries are dictating their future purely in narrow terms of self-interest. You look at Russia, you look at China, you look at India. So I think it's unhelpful now to look at the world in ideological terms. You need to look at resource scarcity and how countries are preparing to deal with that.
Well, let's talk a little bit more about that resource scarcity. Rare earth minerals, something that we've talked about on this show before, and something that a lot of people had never heard of 6 months ago, and yet they're very important, and actually they affect global trade, don't they?
That's right. Well, it's like any commodity, I guess, but obviously rare earth is now so fundamental to the development of high-tech applications, so there is obviously a premium now on that. So China being a key country, a key producer of rare earths, and being able to control the supply chain, obviously affecting how other countries and companies are doing business with China, and they have to get their supply chain exactly right.
Now, you've identified 5 countries for investors to watch. There's Nigeria, Pakistan, Sudan, Iraq, and then there's Turkey. Let's take Turkey first, because that's slightly different from the rest.
It is, and Turkey is the good news story, I guess, and one that can easily slip under the radar when you're looking at risk and some of the bad things that are happening. But Turkey has been a shining example of how a company has very astutely played its geographical position, its diplomatic position, very shrewdly, and it's now reaping the rewards. And it's a strong economy, it's a very stable and progressive government, and it's really making a big difference in that part of the world and beyond.
And for the other 4 countries that you've highlighted, are those countries where it really is very difficult to do business, where the risks maybe are greater than the opportunities? Yeah,
they're countries where it is difficult to do business. You have political uncertainty in most of them. But again, there are countries where there is huge opportunity, and that's one of the reasons why we've chosen these. If you look at Iraq, clearly very daunting obstacles to surmount, but the opportunities are enormous. You look at it potentially being one of the greatest producers of oil. Nigeria, similarly, big elections in April, so a lot of instability in the air, but also major upside if the political situation can stabilise.
Now, anti-corruption has always been a big theme, particularly when looking at emerging markets. Has that changed?
It has changed, yes. We're now seeing legislation that's being promoted with a lot more bite, policies that are actually going to be implemented, whereas before, primarily it was theoretical, the application wasn't that draconian, but now we're seeing, in the case of the UK Bribery Act, really big commitments for multinational companies to actually practice what they preach, and there will be a lot of scrutiny about how they do their business wherever they are in the world.
And how difficult is that for a multinational company that wishes to be involved in some of these emerging markets but finds that when they get there it's almost impossible to do business without bribes?
It's very difficult indeed, and there are a number of countries in the world where that is one of the key problems that a company will face. But there are strategies that companies can use to deal with it. They have to have a very clear stance when they go into a country about what they will do and what they won't do, and they have to train, they have to get that ethos going right from the top down of the company, so a decision taking in a boardroom in London or New York is actually going to be followed through on the ground in India or Kazakhstan or wherever they may be.
OK, big challenges. Jake Stratton, thank you very much indeed.
Thank you.